Thank you, Shai, and good morning, good afternoon to all of you. Yes, I'm speaking to you from our Madrid office. I've been in Mexico and Madrid over the last few weeks. I like to be with clients and our operations in as much as possible. And as markets return to normalcy and meetings are again possible, I am returning to my usual travel schedule. But we're here today to discuss our results and progress during Q2. We have finished the first half of the year with strong results. In Q2, we have continued our growth trajectory with significant improvements in revenue, EBITDA, and continued cash flow discipline. Despite the continued impact of the COVID pandemic, in some of our regions still severe during Q2, we have delivered revenue growth of 17.6% in constant currency, 21.7% in current currency, and 50.7 million of EBITDA at 13.3% margin, more than doubling our EBITDA of last year. These results have allowed us to continue deleveraging, putting us already within the full year guidance of 2.5 to 3x net debt to EBITDA ratio. This higher EBITDA in H1 and solid expectations for H2, which, as you know, due to the seasonality of our business, is when we generate higher profitability and most of our cash flow, have allowed us to be confident to catch up on some capex and tax deferrals that we did last year while investing in growth for this year. We continue to improve our hard currency mix, US dollars and euros. We're delivering around 25% of our revenue and 30% of our EBITDA, 15.8 percentage points more than last year, in hard currency. This is thanks to continued growth of our US business and improving profitability of our EMEA operation. We feel that our sales engine continues to improve. We have more than doubled sales in the first half of 2021, and we expect to finish this year with a strong book of business leading into 2022. Despite the fact that we continue to be vigilant and we continue to invest in COVID-related safety measures, with these results, we feel that we have fully recovered from the impact of the pandemic in 2020, amply exceeding the results of 2019 and being fully on track to deliver our 3-year plan. Now, while delivering the day-to-day, we continue to focus on our transformation. This quarter, we have added a new Chief Human Resources Officer, a new CIO, a new Chief of Information Security, and a new ESG Director. We're a people-intensive business, and the quality of our HR processes and talent management is key to our results. And further, as we change the company, we need to pivot to new skills, new talent profiles, and work culture. Adding new HR leadership is paramount to these objectives. We're also placing more and more emphasis on the technology that we use and that we bring to our clients. Among these, of particular importance is cybersecurity these days, both for our internal use and as a differentiator in our market offer. We will continue to add talent to our technology, innovation, and cyber areas. ESG has always been very important to Atento. We feel that we have done a lot in the past in this area, but we did not have a formal program at the right level. We have structured a formal ESG program under a new leader, and we have elevated the visibility to the board of directors under a new compensation and sustainability committee. We will be presenting our ESG plan and commitments publicly in Q3. As we approach the 3rd year of our 3-year plan, we will be focusing progressively more on our 3rd horizon, growth. Our US strategy continues to gain momentum. We have achieved in Q2 33% growth in revenue, 53% growth in EBITDA. We continue to achieve wins in both the commercial and government sectors with important new contracts, important wins, one of them serving the US Department of Homeland Security. Although the majority of our employees work and are expected to continue to work from home, we're opening 2 new centers, one in Florida and the other one in Utah, thus giving us better time zone coverage. Our strategy to focus on new sectors and global accounts continues to gain traction. We continue to grow in all of our geographies and in our new focus verticals such as media, tech, and more digital, advancing their share from 8.6% to 10.9% of our total base. We are launching new services and expanding profitable ones. We're expanding our multilingual services with partnerships such as the one we recently announced with Manpower Group. Now, having finished a strong H1 with a strong Q2, we feel increased confidence to meet or exceed the guidance that we provided for the year. We expect to finish the year strongly, on track to meet the objectives of our 3-year plan for 2022. As I said to you from my first presentation, this management team will work hard to earn your trust, and I cannot think of a better way than consistently delivering on our commitments to you.